Welcome to this week's Q&A. This is a bit of an interim situation question because one of our viewers from Singapore has asked me, look, the Australian dollar has weakened off almost 10% this year so far. So from a high of 80 cents in February to a low of 72, it's been a very significant move, and it's certainly helped a lot of our Australian expat clients in relation to acquiring further property in Australia because they're earning incomes that are in a different currency. So whether that's US dollars or Great British pound sterling or Singapore dollars or Hong Kong dollars, their earning capacity has obviously increased, their borrowing capacity has increased commensurately, and the assets that they're buying, the property in Australia, is effectively going to cost them less. But this particular viewer is in Singapore, and just recently the Monetary Authority of Singapore, the MAS, has actually tightened policy, as it were. So they've moved from a zero situation to an upward adjustment in their band. So they're allowing the Singapore dollar to appreciate against other currencies, if you will. And they're doing that in relation to the signs of inflation that we see out there, rising costs, supply chain bottlenecks, etc. So, this person's saying to me, well, look, I don't really care about what's happening to the Australian dollar versus the US dollar because I get paid in Singapore dollars. So to me, it's only really important what's going to happen between that currency pair. So the Sing dollar to Aussie dollar, and currently it's at parity. But what's going to happen there? So my view is that the Australian dollar at this point in time is undervalued if we look at where commodities are, where commodity prices are in the cycle. I mean, in the previous cycle, the Australian dollar was at parity to the US dollar. So 125 or 130 against the Sing dollar. So we've got to look at that, and I think as we go through later this year in 2022, I see the Australian dollar strengthening. So I think it will strengthen against the basket of currencies, and that will also include the Singapore dollar. So I think it's hard to pick. Obviously, no one has a crystal ball, and forex trading is notoriously difficult even for the professionals that work for major banks that make their living from doing so. So don't try and trade currencies, I always say, and try and perhaps be a little bit more conservative in your approach. So without trying to pick tops and bottoms in these things, if you like to create a bit of peace of mind and stability, you can always tend to move currencies around a little at a time, so that it's not going to be a win or lose situation, but more of a gradual move, and that way you're going to get, I guess, the tailwind or the benefit of currency movement in your favour and avoid loss of a headwind occurring that's going to detract from your value equation. If you found this interesting and you like what I've been telling you, please subscribe to our YouTube channel and click like. I'm Andrew Unterweger from Wise Guru, and I look forward to more of your questions for next week's Q&A. All the very best.